Microsoft's blockbuster earnings last week. They blew out earnings. It was very exciting. They cemented its status as one of the biggest winners in the artificial intelligence boom. We knew this. Satya had carved out just a massive amount of territory. GitHub Copilot, first real major breakthrough product that was monetizing on top of GPT 3.5. Great product, obviously led by Nat Friedman when he was there.
Last we heard, it was at around $500 million in ARR,
something
but that
like
was
that.
2 months ago, so it's probably in the billions now.
Yeah, probably bigger. And then the crazy OpenAI deal, they got in very early. They have this massive revenue share. They have an ownership. They get a copy of any software that OpenAI writes, basically, or acquires. That's kind of crazy. And so
Satya did seemingly one of the best deals of all time for Microsoft.
Potentially, yeah. I think so. It's hard to. I mean, it's an awkward situation now. And it's a really hard decision.
Sam is, renegotiating the deal.
Yep. And Ben Thompson was noodling on this, like, should they take the money now or should they play it more like a venture style bet? What is the role of the CEO of a $4 trillion public company where the shareholders have different expectations? They're not seeing, if you hold Microsoft stock, you're not feeling like you're an LP in a venture fund.
Yeah.
So if the CEO comes to you and says, hey, look, we're taking the cash flow now, we're going to dividend some of this out, we're selling down the position, we're thinking strategically about this as opposed to just, we want the highest multiple. We want to ring the gong on the deal. That could be reasonable. So obviously we're tracking where that goes. But they also have Clippy, generational precursor to potentially all the AI agents, the original AI agent, Clippy. Yeah. Potentially making a comeback.
The original superintelligence.
The original superintelligence. And
that was the first time they had to move the goalposts.
And this is why we're worried about getting paperclipped, because Clippy will become too strong. I mean, with the power of OpenAI and Microsoft Azure, anything's possible there. So anyway, outside the AI race, Microsoft is minting money from corporate customers spending on regular technology, long a sweet spot for the company. Many companies are shifting from buying their own IT equipment to renting it from Microsoft through its cloud's computing service. They are also renting more standard issue computing stuff, hard drives for data storage, for example, to support their AI efforts. And so this is the key stat from the earnings call that the Wall Street Journal is highlighting, and then we'll kind of dig into this number and what it means, because there's a lot of different explanations for what could be going on. But Microsoft and the CFO and CEO didn't necessarily give all the context that we'd like to set this definitively, but I think there's some really good theories floating out there. So the quote from the Wall Street Journal is, a large chunk of the recent strong growth in Microsoft's cloud business called Azure stems from that. More than half of Azure's 33% revenue jump in the company's March quarter came from non-AI services. While the company didn't give a comparable breakdown of the cloud unit's 39% growth in its June quarter, it said that the core infrastructure business, Microsoft's lingo for its non-AI cloud business, was the driver. Jordy?
Massive win for enterprise SaaS. Just good old-fashioned SaaS. We had some theories.
So we had some theories. It's not SaaS.
Yeah,
they're not selling SaaS.
So it's people migrating from on-prem to
it's what's called
cloud.
Infrastructure as a service.
Yeah.
So there's software as a service. That's when you go and get Teams, or you go and get a subscription to Excel in the cloud or Outlook in the cloud. That's software as a service.
I was saying more traditionally, someone
people
else
building. Using it as infrastructure as a service. Then there's also platform as a service. That's like Heroku on AWS, where you go and you deploy an app. You could think of maybe even like a Replit as like a platform as a service almost, where they're hosting you, but they're not just providing you the raw infrastructure. Azure's core infrastructure business is essentially infrastructure as a service. IaaS is the term. And that means, you want some CPUs and some hard drives and some Ethernet cables and moving stuff around, data transfer.
You had an interesting thesis offline earlier.
Yes.
You comped it to people in the internet era buying a computer. They hear about the internet. They're like, hey, I think this might be a thing. I should get a computer.
Yes.
And they just buy a computer. And now you could see something, where companies say, hey, this AI thing might be big. We should get on the cloud.
Yeah. You want to set yourself up for it. And I think if you have a whole bunch of data in some sort of on-prem, you have a data center for all of your data in a bunch of hard drives, and you have CPUs that can do different workloads and data workloads, and maybe you're using some SaaS on top of that. But you realize that you're never going to be in a position to buy 100,000 H100s and you're going to wind up being a leaser of that for some small
or just
fine-tuning
using
run.
other people's application layer
Totally.
products.
Yeah. And so the integration that comes from being in the Azure ecosystem, that could be a driver. There's a few others. When I think about the core, the AI Azure services, I think of that almost as, it is SaaS. Like if you go to Azure and you say, I'd like to, put my credit card down and I want to be able to use the GPT-4 API. And I also want to be able to use Llama 3. And I also want to be able to use DeepSeek. And I want to be able to call all these APIs within my product. I almost think of that as tokens as a service. Like it is SaaS, but it's something else. And I think these token factories, I think this idea of how much revenue are you generating from your token generation business is really what we're talking about when we talk about Azure's, core AI products versus the infrastructure. But there's a bunch of interesting wrinkles that could be going on within the classic core infrastructure business. So this, of course, is virtual machines. You just want a Linux box with a CPU to host a website. That's something that you do on Azure. Storage, networking. Okay, I want to store all my data. You could go to AWS and store it in S3. You could go to Google, store it in BigQuery. You could also go to Azure and fire up any sort of storage database or just raw hard drives, and then networking, moving stuff around. So this is the infrastructure as a service versus tokens as a service. They're higher level AI APIs. So GPUs are, so the question is like, why is their infrastructure as a service growing faster than their tokens as a service product? You would think that Microsoft is going to their enterprise clients and saying like, you need to build AI, you need to bring AI into your products, and we have all the best APIs, so just buy tokens from us. And you would think that would be the boom.
Well, couldn't the other factor here be that they are massively supply constrained on the GPU side?
Yep.
And they have this, multi tens of billions or hundreds of billions of dollars of backlog that they can't fulfill. Meanwhile, they had a, more kind of like predictability on the traditional data center cloud side that they were able to scale up to. So that feels like a potentially like a pretty big driver here.
Yes, definitely.
But still shocking.
And so as companies come out and they say, okay, we are scaling our hardware and software our technology footprint broadly, going into this AI era, we're excited about this stuff. Well, we're also going to need more databases. We're going to need to put more data in those databases. We're going to need more CPU workloads. We're going to need more of everything. And Microsoft's like, yeah, of course, we can definitely get you a whole bunch more hard drives and a whole bunch more CPUs. We're not constrained on that at all. And the CapEx is keeping up, so they're able to service that. There's also an interesting thing where tons of AI stuff can technically be happening inside the core infrastructure bucket. You just don't necessarily know what's in there. So some examples are like, if let's say you're a pure AI company, or you have a new AI workload, you could go to Azure and say, hey, I'm going to do my own AI thing, but I need a ton of storage for data because I'm going to be training on it. I'm going to need a bunch of networking to move that data around when I do a training run. So that could be driving core infra up. And then also, if a bank hypothetically spins up a huge cluster of H100 GPU virtual machines to fine tune an open source model like Meta's Llama 3, this would show up as core infrastructure, not Azure AI services. And so that's like textbook AI boom. But it's just happening in the wrong bucket. And then I also saw a post that potentially ChatGPT counts as Azure core infrastructure, because they're not serving ChatGPT through the Azure AI API. It's not this like snake eating its tail Ouroboros. It's like OpenAI just came and said, give us a whole bunch of...
The headline itself ends up becoming pretty misleading.
Exactly.
Because, and again, this was probably, a lot of people were reading into AWS's growth, the reports that, Andy, or the comments Andy had given on AWS last week. And the big thing that AWS is missing is having a ChatGPT building on top of AWS, right? There's no dominant consumer product, at least at that scale. ChatGPT, I think as of this morning, somebody was estimating getting to 1 billion weekly actives this year, which again, those types of products don't, the power law is like extreme, right?
So if you, I believe Anthropic is pretty tightly hitched to Amazon, and I think the next big cluster from Anthropic will be powered by Amazon for the most part, and so they're getting there. Certainly if they're building all the infrastructure. For Cloud.
But again, that would show up on
core
token generation side, like more of the
No. So if Anthropic goes to AWS and says, we want you to build a huge data center to serve Claude Code for us, that's going on. That's going on in infrastructure.
Yeah.
Not actually APIs. But when you go to AWS and you're just some random company and you say, I need a database and I need some storage and I need a web server and I also need a bunch of tokens from whatever model you can serve me. And they're like, we got Claude. And then you're like, yeah, let's pull the Claude tokens into my app.
It's a good model.
That's token as a service. What?
It's a good model, sir.
It's a good model, sir. Exactly.
The one thing that stood out to me, that has stood out to me across this year with Microsoft is they've done more layoffs this year than the past 3 years before that combined. So 2022, 2023, and 2024.
That's crazy.
And so this just shows the level that Satya is operating at. Is like the company has been on a tear this year, performing exceptionally well, and he's still thinking about how do we get more and more fit. So
to be clear, literally every piece of Microsoft business is growing and at a very solid clip. So Microsoft 365 commercial cloud business, which houses remotely accessed versions of Word, Excel, other productivity software, that grew at 16% from a year earlier. So that's like, it's not the most insane growth rate, but that's still crazy because you think about who doesn't have Excel that needs it? Like who are these people who are like, you know what? 2025 is the year that my company's getting on Excel. We're doing it.
Well, it's just crazy when you compare it to AWS growing at 19%.
Yeah.
Obviously very different scales.
Yeah, totally.
You would think you don't want to be in the same ballpark as...
And so that was the news with AWS, if you missed it. They beat earnings. They did very well, but they weren't growing as fast as the others. The other cloud platforms, Google and Microsoft. And so the Amazon stock traded down. The narrative around AWS is different because Microsoft has OpenAI, Microsoft Research, and has GitHub Copilot, and is like really moving things forward in the AI world. And Satya's seen as someone who goes on the Doorcash podcast and talks about AI, and it's clearly like really on top of it. And obviously Google has Gemini and a million different products and strategies around rolling that out and staying on the frontier. I mean, they have a frontier lab internally, and Amazon's just not there either on the partnership side or on the core training frontier lab side. And so it's a little bit of both. Anyway, let me tell you about Figma. Think bigger, build faster. Figma helps design and development teams build great products together. We had a great week in New York celebrating Figma and the IPO. Stock's been up, stock's been down, wild ride, but we are still very happy to be partnered with Dylan Field and the Figma team. And I'm super excited to see what happens next because
Thursday was such an incredible day. Just getting if you didn't get a chance to listen, we talked with the seed lead investor, all the way through, of course, Andrew Reed, who led the C.
Yep.
And then capped it off with Dylan and also got to speak with Lynn Martin, president of the New York Stock Exchange, as well as Chris, the CTO of Figma. So really incredible day, and it's just very proud of the Figma team.
Yeah, it was awesome. In one sense, investors might prefer to see AI businesses driving growth. That, after all, is what has driven the company's valuation through the roof. But tech companies' stocks arguably hinge on too much on AI. To the extent that they can keep increasing other revenue streams, they are on more solid financial ground. Of course, none of that means anything if all of the growth is coming from OpenAI. But at the same time, does anyone really think ChatGPT is Yahoo anymore? They're generating $1 billion a month in revenue at this point. Everyone uses the app. It's installed everywhere. Like that token demand is not going anywhere. That infrastructure demand is not going anywhere. So
on the other side, Amazon is down just over 9% since Thursday. Since earnings.
Wow.
And then this morning, unrelated, they announced that they're shutting down Wondery, the podcast studio
Really?
they acquired in late 2020
Wait,
and
why
cut
did
110.
Amazon? Why did and the market's way up? Wow, Nasdaq's up 1.8% today after a brief sell-off on Friday. Good news.
Bear market is over.
Yeah, we were so over, but we're already so back. It's fantastic.
Love when that happens.
Markets go up, markets do go down, but the march of technological progress, the arrow points in but one direction.
That's right.
And its march is relentless. There is another silver lining for Microsoft. Non-AI sales can be substantially more lucrative than AI ones. Non-AI gross margins within Azure were around 73%. Wow. That compares to 30 to 40% gross margin for AI. He estimated because of the huge cost of setting up AI infrastructure, that makes sense. You get more margin on just a bunch of CPUs and databases that you've harnessed and built everything around. Also, you still have that interesting dynamic where it seems like all of the cloud, the hyperscalers, don't really compete on price because they're all pretty comparable, but they seem to all have really good margin.
Coca-Cola dynamic.
That's what it seems like.
Yeah.
I'm not exactly sure if there's something else that's more fundamental going on.
And the Coca-Cola dynamic is I don't know if we, it's hard to tell what conversations were off air or on air, but John last week, forget when, was describing how you would think that Coca-Cola or Pepsi would decide to get aggressive on price to try to gain market share and get people to switch. But ultimately, that would just lead to a price war with both companies, massively eroding their margins, and then
it'd all be RC Cola coded then.
Yeah.
Every
So if you have a fierce competitor, consider entering an unspoken gentleman's.
That's the
maybe a gentleman's agreement.
It's not even a gentleman's agreement. It's not. It is unspoken, but it is It is a natural game theoretic Nash equilibrium. It is the natural state of things that both sides understand that to go to war would be mutually assured destruction, and so they don't even need to talk about it. And so instead, they both agree to keep prices where they are, and instead compete on marketing.
Product.
Compete on marketing, really.
Yeah.
Yeah. I mean, they don't reformulate that often. They mostly compete on marketing, and that allows them to have this continually compounding business, and that's why it's in the Warren Buffett portfolio. Coca-Cola, he's been in there for a long time, and Pepsi's been doing well too.
And he was a DAU, of course.
He was a DAU of Coke.
Still.
Diet Coke or Coca-Cola?
Diet Coke.
I think Coca-Cola?
No, Diet Coke.
Oh, he's a Diet Coke guy? I feel like he was a Coca-Cola guy.
Warren?
Yeah, look that up. I want to know. Anyway, I'll keep reading from this Wall Street Journal report. Luckily for Microsoft, demand for lucrative non-AI services appears to be reasonably strong. Measures of broad IT spending.
Right.
There we go. You know
he
why?
He was a regular Coca-Cola guy.
You know why? It's because it has corn syrup in it. It's literally corn grown from Mother Nature, from the earth. And then syrup, it's what you put on pancakes. It's the most wholesome combination of foods you could imagine. Maize. This is something that's been grown in America for generations, for centuries.
Corn is so popular in Nebraska, right? It's grown everywhere.
Exactly.
It's culturally
Take corn
significant.
and the syrup that you put on pancakes. It's the most American, most wholesome ingredient. It's not this refined sugar, this crazy stuff from somewhere else. No, it's American.
Corn syrup.
There's nothing. It's Lindy. Corn syrup. Yeah.
Don't worry about it. Seed oil haters are in disbelief.
In shambles. That we need to return to corn syrup. None of this. None of whatever's in this Coke Zero.
Yeah, your grandpa was drinking corn syrup.
Yeah.
Buddy.
Oh, and it's too good for you because you read a couple posts on X.com. Think you understand something better than corn? Delicious corn on the cob. Something you have at a barbecue. Oh, now it's too good for you? Can't possibly have corn? What's next? No apple pie? What's next? No rotisserie chicken? No turkey on Thanksgiving?
Somebody's going to listen to the show for the first time today and just go raging DMs for you promoting corn syrup consumption.
It's as American as apple pie. And Warren Buffett knows best. He's doing great. And of one study, sort of a Brian Johnson.
Yeah.
He's sort of the Brian Johnson.
He's the original Don't Die.
Yeah. And he's been doing fantastically on that front.
Yep.
He's great. Anyway. Measures of broad IT spending were fairly muted at the start of the year as companies pondered the impact of Donald Trump's tariffs, and concerns bubbled about the health of the global economy. attitudes appear to have improved somewhat in the second quarter, though. A UBS survey of cloud computing customers in July showed a clear improvement in tone about spending. Most were moving forward with efforts to migrate computing work to the cloud. They're like, this internet thing is real.
It's real.
We got to put the data in the cloud.
We held back as long as we could.
We could. But it's 2025. We have no more excuses. The tariffs, that's come and gone. Now's the time.
We were resisting the 21st century,
Yeah.
but we're a quarter of the way through.
Put the data online.
It's not going away.
So let's use the computer online in the cloud.
Put the docs in the cloud. Bud.
Put it in the cloud.
Just put the docs in the cloud.
Put the fries in the bag. Anyway, and put your compliance process on Vanta. Automate
That's right.
compliance, manage risk, improve trust. Vanta's trust management platform takes the manual work out of your security and compliance process and replaces it with continuous automation, whether you're pursuing your first framework or managing a complex program. In the longer term, there is little question that cloud computing is going to grow in ways that play to Microsoft's strengths. Its rivals, mainly Amazon.com and Google, are growing quickly too, but don't have all of Microsoft's broad corporate software offerings that enhance its cloud footprint, even outside of AI. Amazon on Thursday said its cloud unit grew at 17.5% in the June quarter, disappointing investors and forcing CEO Andy Jassy to answer questions about Azure's outperformance. Why are you getting beaten? You created this category. You created this product. Why is Satya Nadella
You are
getting
cloud.
you? You are the cloud. You are the cowboy of the cloud. And you're getting put out to pasture. Recent quarterly earnings in Azure's favor were really just moments in time, he
Look
said.
at that chart, John.
Wow, that's worse than I thought. I wasn't sure where we had that pulled up.
I mean, it would have been hard to predict 5 years ago that we'd be sitting here with Microsoft at $4 trillion and
what's Amazon at?
I think 2.2 trillion.
2.2.
2.27.
2.27. Okay, so
Not-
almost double.
Still magnificent, but
Still magnificent, but you got to keep fighting. The company's stock fell 8% Friday, and it looks like it's still sliding.
down even more.
The question for Microsoft's investors then is less about its prospects than its valuation. The company's stock is up nearly 40% since the beginning of April, pushing its forward price earnings multiple above 33. That's a bit richer than Amazon and a large margin above Google, which is trading at a multiple of roughly 18 times. That should be easier for investors to digest because, while Microsoft's AI growth is real, it is far from the only thing going right at the software giant because they got Excel. They got core infrastructure. They got AI, APIs. They got tokens as a service, infrastructure as a service, and software as a service. They got the royal flush. It's going well over at Microsoft. They won't need to call McKinsey, but maybe Amazon.com will.